Hey everybody, welcome back to another episode of the Bulletproof Dental Practice Podcast. Today we have another exciting guest who's been on before, someone Craig and I are extremely fond of, and he's now helping the dental industry. It's Peter Mallouk, who's president of Creative Planning, and we're going to talk about good stuff today in light of all this cloud of 2020 that seems to be so confusing. So, Peter, we're excited to get you on today to help clear the air and give us light in this uncertain times.
Yeah, it's good to be with you guys again.
Yeah, exciting. The last podcast we did had such great, we got such great reaction from having you on. So I'm really glad that you're here again, man.
You guys are like celebrities in your space. I love it. So it's good. Everyone knows who you guys are. It's great to be on your show.
Yeah, when you have guests that call us celebrities, that's why we bring you back, right?
Yeah, exactly. Ingratiate the host. Always never a bad idea. Well, thank you for that. But also just a little bit of background. If you don't know who Peter Mallouk is, best-selling author. God, you got I know, I don't know if I'm allowed to say this, but 52 billion assets under management, which is quite large. And just a great thinker. I know you through Tony Robbins, and congratulations on the brand new book, The Path. Just debuted less than a month ago, and I'm just reading the reviews. It sounds like an awesome book. I'm excited to dig into that one. I got a big road trip I'll be going through next week, so I'll be going right through that book.
All right, well, good. If you have the audio, you're gonna have to listen to me for like a couple hours. So
wait, so you did the audio, Peter?
I did the audio. Somebody said it was a good idea, and about 8 chapters in, I wasn't so sure, but it was fun in retrospect to do one that way.
I did our audio I did our audible for our book. I literally said to Peter
for 3 days, I was like, do this.
Yeah, I thought it was going to take like 3 hours, just kind of bang it out. And like, you don't realize how many misspeaks you do and get your energy up. And it was so much torture for me. I'll never do that again.
Oh, too funny. Yeah, me either. I think that was a one and done.
Yeah, well, you never know. You got 2 really big books out there, so you never know what's going to happen. But I'm excited. And then Tony actually narrated the other portion of it, correct?
I think he did one. He did a chapter of it. Yes.
Okay, got it. Yeah. That's awesome. Very cool. So go ahead, Peter. Sorry.
Nothing. So Peter, since last we spoke, obviously the world has been, there's been a lot of, it's been tumultuous to say the least, right? We've had a pandemic, we've had, crazy election. And I think people are just I think there's never been a sentiment of more uncertain times, whether that be in the financial space, whether that be in the political space, whether that be what's our future look like. Can you give, and you're obviously your ear is to the ground when you manage $52 billion, you probably know a lot more than most common folk, right? And Craig and I. So sure. One of the chapters in your book, you kind of talk about, and we don't have to get into this, there's no particular order in what we talk about, but, I think that what I wanted you to talk about was kind of, the light right now, and the world is better than you think, which is chapter 2. And Craig, you had talked about maybe just getting some insight on, the market, right? Yeah. And so Peter, let's take this wherever you feel like, wherever you feel like this would be the most impactful for the listeners right now, especially given the dental context, maybe.
Well, Peter, I think it's great to start where you point out there, the chapter in the book where I talk about things are better than everyone thinks they are. The reason I put that in there isn't just to make people feel good, which is a good side effect, but you kind of need a generally stable world for investing to work out. You need to know that your local Chipotle is not going to get blown over in a war that happens to be in your backyard. And so I start just to level set the world we live in today, because everyone thinks, it's a political apocalypse and we're regressing in so many ways and we're more divided than ever and the economy is more bleak than ever and the world is at war and all of that. And so I just kind of start with, where are we really? And believe it or not, we're living at one of the most peaceful times in all of human existence. You're less likely to die in a war now across the world, not just in the United States, than about any point in human history. It's incredible how much the probability of that has gone down. Even in a world with a recent pandemic, you're less likely to die of a virus or a disease than at about any time
Wow.
in human history. The reason we're so stunned by the recent pandemic is because we got spoiled at not having them. We used to have stuff like this all the time that killed us. And the reason we don't is because of the incredible advances with technology and biology and medical care that make it surprising that even anything like this could happen again. And look, it happened. And, within a very, very short period of time, you have several vaccines.
Yeah.
So it's really stunning, the progress from a medical perspective. When I talk to doctors, particularly those in the fields of neurology and cardiology, they talk about how in the last 15 years they've learned more about the heart and the brain than in all of previous history combined. And I think the reason these things are important is there what is driving those things. Part of it is technology and innovation that are changing our quality of life. So someone who is growing up in poverty now, and poverty is terrible and there's great discrepancy, that we can come back to that. Someone growing up in poverty now is living a better quality of life than a king in England 150 years ago. I mean, there's just no debate about that. And so things have progressed so much. But what's happened at the same time is we're getting news around the clock and you're able to get micro information. When I grew up, you guys are younger than me.
Oh, no, I'm older than you, Peter.
Yeah, we would, damn it, that's even worse. You look that much younger than me. But the reason, when we would have Seinfeld on, everyone watched it. You went to work and there were common experiences because there weren't that many channels to choose from. Today, there are so many that a leading show would have a tiny, tiny segment. It would have been canceled, back in the 80s or 90s, but that shared today would be a leading show. We've lost our common experiences because of all that specialization. That specialization is a result of technology and innovation. So while we're living a better quality of life than ever, we're living a healthier life than ever, we're living a safer existence than ever. That's the kind of world where businesses thrive, but the information's coming at us differently.
You sound a lot like someone I follow. I'm sure he's probably your friend, who's one of my just idols, is Peter Diamandis, and kind of he wrote that book a long time ago, and it changed the trajectory of the way I thought about things. He wrote that Abundance, and he talks about what you're talking about, like right now, like it seems like a daunting time we live in, but it's the safest, most prosperous, most peaceful time, and the future is bright, meaning that the longevity of life, the advancements in healthcare, and you mentioned that your doctors talk about the volume of information, and that volume of information from the dawn of time to now will double again. That volume will double again in a year and a half in the medical space, and it's advancing faster and faster and faster because of AI and supercomputing and quantum and all that stuff. So it really is a cool thing. The advancements happen, not just linearly. They start happening on a log scale, right? Yeah. And so it's fascinating to it's mind blowing. It's hard to even keep track of, but I love that you're giving light to this space, because I think the news has tainted, and they keep seeming to have to, if it bleeds, it reads, and they have to make it bleed a little bit more. And then you're not getting people's attention. So make it bleed a little bit more and more and more. Right. Before you know it, you're just inundated with millions of messages of, oh my gosh, the world is either at war from a political standpoint, or, we're all going to die from a pandemic or whatever. And so I love that you started the book with light, is all I can say. So, anyway.
Well, I hate the way all that negativity bleeds into investing. So if you think about the way people feel about money, the way they feel about money is really rooted in their childhood. So when they're young, they grew up in a place where money was scarce. There might have been this scarcity feeling. They're scared to lose it. They can't spend it. Or they have an unhealthy relationship with money. They get it and they spend it. They get it and they spend it. And so when you start to add fear and division and all of that, you layer that on what people are thinking, they start to make mistakes. I mean, I remember after every election, doesn't matter, President Obama, President Trump, now President Biden, there's always those few calls of, I'm going to cash, this is terrible, the world's going to end. And where does all this fear come from that translates into making these terrible portfolio mistakes? Or the idea that somehow, everything with investing is going to be totally different. You really have to pull it back and go, well, let's talk about real companies. Is Nike still going to sell shoes with President Obama or President Trump or President Biden? Of course they are. Is McDonald's, is people still going to go get breakfast at McDonald's? Of course they will. Do your kids still want to go to Disney World? Yes, they do. So some of those companies can come and go, but until you can change that narrative, of what's really going to happen with those companies, you really shouldn't be changing the way you think about investing.
That's great advice. I was actually walking with my mother this morning and talking about the same thing. It was she's in town visiting, and I was saying, every time it seems like every change of presidents, you get that, well, oh my gosh, this little amount of uncertainty. But I looked back, just like you said, and I was like, I thought my life was going to change at this president, and it really didn't. I thought it was going to change at this president, really didn't. Everything kind of stays the same, but we paint this picture of, oh my gosh, fear of loss or fear of something in our minds. So
we're always looking for causation too. So it's such an easy thing to point, oh, it's the election, I'm going to go. And that whole idea about I'm going to go to cash, there's so many people, there's so many wealth advisors and planners that will actually tell you this is the time to go to cash.
Yes.
Like, it's crazy. And I remember reading in the first book where you said, like, if anybody ever tells you that, that's like, it should be a tell. Because
yes.
how do you know? And if you and what's that statistic you cite that if you would have invested on the worst possible day, can you give that little soundbite?
You're the worst investor in the world. I mean, you pick the crisis. The day before 9/11, the day before the tech bubble, the day before the 08-09 crisis, the day before the pandemic. All those previous ones besides the pandemic, your money has tripled or quadrupled. And now even from the pandemic, we're up a lot, and that was half a year ago.
Yeah.
So, people are always like, well, I'm waiting for that entry point. The entry point is right now. The entry point's right now, because the market moves up about 75% every year, 75% of the time. If you're there for 3 years, it's 93% of the time. So every day you wait, the odds are moving against you. They're just moving against you. So quit waiting for entry points. As you get money, invest it, and you'll come out ahead over the long run.
I think when people see like all-time highs, Peter, they get scared that, oh, this is a bubble, it's going to pop, right? And because we're in this crazy, with the good news of vaccines and stuff coming in the market, and the market, even today, it's probably going to have a great day because of Moderna's vaccine. And so I think people get like, well, wait, it looks frothy here, I'm not going to invest. And you're saying, the best time to invest was yesterday, always. You can say that every day. The best time was yesterday.
And the market hits an all-time high once every 19 days. And the way I explain it, to our clients is I said, well, a Hershey's bar sometimes goes on sale, but in general, we expect the price of the Hershey's bar to go up. Same with a box of cornflakes, same with a value meal at McDonald's. If you think the price of those things is going to be lower 5 years from now, by all means, then don't invest in the stock market. But if you believe that those things are going to cost more 5 years from now, that same wave impacts the market returns.
But like sale prices, the funny thing is when the Hershey's bar does go on sale, people stock up on Hershey's bars. When the market collapses, no one wants to buy. When things go on sale in the market, that's when people don't buy.
That's right. It's the one thing no one wants to buy when it's on sale. They always want to pay a premium for it. It's the one thing they want to pay a premium for every time. The biggest outflows in 2020 were in the first 3 weeks of March. So the most money leaving the markets this year were during the worst month of the year. And so all that money went to cash. Of course, then to March, the market took off and really hasn't looked back since then. Most of that cash didn't work its way back in, creating permanent harm, permanent damage.
Peter, can I ask you another thing that I've been waiting to ask you on this? Does the ratio, or I should say the debt to GDP ratio, is that scary at all? Has that been times when it's fluctuated? Because right now it's like over 135%. Can you talk about that?
So I would look at it two ways. So part of it is you have to look at it at that loan again. What is it against? So a lot of people say, oh, the United States prints this money and it has nothing to back it up. Well, that's not true. The United States owns huge amounts of land, huge amounts of energy reserves, huge amounts of gold. The United States has real assets. And when you look at the loan against the assets of the United States, yes, the loan is at an all-time high. Just like, say, a house gets bigger and bigger in value, and the loan, you keep borrowing against it and it goes higher and higher. The key isn't how big the loan is how sustainable it is. And there's two ways to look at it. So one, we know there is collateral, right? It's not just, we're not Zimbabwe where we're printing money and there's nothing to back it up.
No assets. I never thought about the assets. Yeah, continue. Sorry.
Yeah, but the second part is, let's say that you've got a house that's $1 million and you've borrowed $500,000 against it at 6%. And instead today, you're borrowing a full $1.3 million even. You're borrowing more than the value of the house. Now it's 1%. The cost of you carrying your home loan is lower than it's ever been. You're less likely to have a problem now. Well, the 10-year treasury, the US 10-year treasury, the US is normally used to borrowing at is 6.4%. Today, it averages less than 1%. Okay, so the US can carry this debt all day long at this rate. Now, I don't want to be too Pollyannish about this. There is one problem. And the problem is that some of our debt is a recurring problem. So when you look at Medicare, Social Security, the pharmaceutical drug plan, you start to add to these things and you don't have some kind of revenue to offset it, you have a problem, right? So under Republicans and Democrats, they've added these programs. Once those programs are in, no one debates them. We talk about paying for college today like it would end the world, but everyone has no problem with Social Security. You tell anybody in either party you're taking their Social Security away, they're going to go crazy. Well, that's socialism, right? It's called Social Security, right? We're taking money from everybody, giving it to everybody. If you keep adding programs like that and you don't have revenue to offset it, eventually things don't work out. But right now,
socialism, it's a good idea until you run out of other people's money, right? Isn't that a famous
Yeah,
quote?
who said that?
You
Winston
have to
Churchill.
have a way to match them up. And right now, Congress has shown us they can pass these plans and say they're going to pay for them, but then they don't ultimately pay for them. And we keep adding. It's not that the debt is high, it's that it's expanding. Okay, that we're expanding it every year, and eventually we have to stop expanding it. But it's totally sustainable where it is right now at the rates that it's at today.
That's great to hear. That's good to hear.
That's
yeah,
wild.
because again, the news beats you up on the, never been a higher debt market. There's never been.
Look
never
at what
been,
the
never
news.
been.
Look at what the news does. This is such an interesting psychological conversation. We're all living in fear. The idea that we're less likely to die of some form of illness today, even with the pandemic, than ever before. And also from a safety standpoint, like my wife is always very concerned about our kids playing in the street. I think many people feel their kids are less safe.
Yeah.
And I'm actually, while we're talking, I'm looking up murder rates per 100,000 people for the 25 to 30 largest cities from 1990 to 2020. It's drastically down. Child abductions are drastically down from when we used to play in the street, and we're all feeling really unsafe. Peter, we grew up, I'm a little older than you, but we grew up in the back seat of cars that didn't have seatbelts. Remember when mom would take the corner, you'd slide from one end,
you'd be sliding around
all the way around,
sloshing.
Literally.
How did we live?
How did we
survive that?
We never had bike helmets.
No.
The thought that your child would go on a bike without a bike helmet right now would be,
it's negligent. It's child negligence.
It would be. So here we have all these factors that are driving our fear, and factors that are marketing to us that we need to be scared. And face it, there's a lot of things that can be sold when people are scared. And now we have people that are making their own decisions about their financial future that we can clearly show them with evidence is really bad for them. So how do we stop this? This podcast is not going to reach enough people to erase this trend. What are some things that people can do? Because before we answer that question, we have to talk about the predatory nature of some of the, of what's going on as well. And Dennis, I want to talk about Dennis, and then I'll let you answer the question of what can we do. Dentistry, unfortunately, we get really abused. Both Peter and I had someone in our lives, independent of each other, two different people, that sold us a lot of singular plan type of life insurance that was really not a well-balanced plan. Everybody knows that there's probably some portion of it in life insurance that you carry. But if that's your only financial investment, that's your only way to get ahead, it's not going to be really fair. And that's also highly commissioned. And dentists, unfortunately, spend more every year. And we're finding ourselves as an industry really unable to retire at the appropriate time. So it's a big question, but what can we do, or what can the listener do to offset the tendency to make wrong decisions, emotional decisions, and also speak to the dentist as well? What can they do to be able to safely retire at the end of their careers?
So I think you start with the baseline. You've got to accept reality, that in reality, we're living at the best time to ever exist. Get yourself educated on that. If we want to read my book, The Path, great. There's a bunch of books on it. Peter mentioned Abundance is a great book on it. Just get yourself educated on what an incredible time we're living in. I mean, we've got more people coming out of poverty than any time in history. More people are literate than any time in history. Longest longevity at any time in history. All of these things that we've talked about, you have to start with that baseline. Then second, know why the media counters that baseline. And they counter it because they're public companies. NBC, ABC, CNN, Fox, all these companies are parts of a publicly traded company. Publicly traded company executives have one legal obligation, and that legal obligation, that primary legal obligation, is to make money for their shareholders. That's their job. When the people at Fox and CNN and everywhere else go to work, their job is to make money for their shareholders. How do all of these places make money? It's not the news, it's selling ads. Right? How do you sell ads? You have to show how many people are watching. How do you get people to watch? You have to create anxiety. Okay, more people watch the Weather Channel when things are horrible than when things are okay. The ratings of all these stations are way down post-election because anxiety levels, down on both sides, it seems. And so they have to manufacture anxiety. This is why you get countdown clocks, like countdown to the sequester, countdown to the fiscal cliff, countdown coronavirus count, all these things, anything to keep your attention in this narrative, because your eyeballs are for sale. That's what they're selling. They're not selling you news. They're selling ads to ad buyers. And so they are motivated to create viewership. People are 7 times more likely to respond to negative news than positive news.
Wow.
Politicians aren't naturally negative. They're following the science. They run negative ads because you're more likely to listen to a negative story. So you have to accept how good things are and know why people are motivated to tell you things are horrible. Mm-hmm. That's a really important baseline. That's 80% of it. Once you have that, you go, you know what? I'm living in a time. Why is this a great time? Because of innovation in technology. Peter was talking about the doubling of knowledge every couple of years. It's because of innovation in technology. We know now, no matter how negative we are, we know in the back of our minds that our kids and grandkids are going to live in a world we cannot imagine. They're going to watch movies the way we watch movies with horse and buggies, right? They're going to watch movies and go, people drove? How barbaric. Car wrecks? What are you talking about? How did that even happen? Cancer, that's what caused cancer. That's how easy it was to treat. They're going to figure all this stuff out, right? And so we're living in a time where we have innovation and technology. You need 2 things for an economy to work well. Innovation and technology. We're living in the best time ever for that. I think anyone can argue with that. And then people to buy stuff, demographics. And there's this myth that the country is aging and the world is aging, and it's not true. The average age in the United States is in the 30s, not in the 70s, like people think it is. And so when you start to look and say, what is it that's driving all this? We've got people to buy stuff. We have 1.2 billion people emerging from poverty all over the world. Over 50% of the earnings from the S&P 500, the biggest companies in the United States, are now coming overseas. McDonald's is opening more restaurants overseas than the United States. Walmart's opening more stores overseas than the United States. So even if you're not feeling great about Toledo, Ohio, you should feel good about Beijing, right? And India. People are going to buy stuff. These 1.2 billion coming out of poverty, these people that couldn't read before, that didn't have internet access, they're going to buy stuff, right? So we have innovation and technology. We have people coming out of poverty. So now we have this positive economic wave, probably the greatest time in history to invest. That doesn't mean there's not going to be bear markets and crashes, right? I talk about that a lot in every book, because if it was easy, everyone would invest. There'd be no good return, right? It needs to scare some people for you to make money.
That's awesome.
Coronavirus happens, everybody bails. 9/11 happens, everybody bails. But you know what? Everyone bails the stock market, but they still go do whatever they were going to do. They still go
to
buy
Chipotle.
Stuff. Right. And so that the market just keeps doing what it does. And those people that get scared because they don't have these baseline, mental fixations you need to have to succeed, they transfer their wealth to you. Mm-hmm. So that's the key, is to understand that the markets are going to respond to the media, because the markets are just a bunch of people. And a lot of people get scared really easily. But the smart money keeps investing, keeps buying, stays in, and wins.
That's so brilliant, the way you have this ability to just take these just very complex situations and chunk them out. I love it. And it's true. It's like you're speaking these, all these statistics, and I'm like, I'm shocked by them. I'm shocked about 1.2 billion people emerging out of poverty. I'm shocked that there's more stores being opened up overseas, more McDonald's. I'm shocked. I never even thought of more Walmarts opening up outside of America than here. It's incredible because I am certain, or at least I'm sure you have statistics about this. Confidence of the average American is probably at a low.
Yeah.
We're all inconfident about our future. We're all scared. We're really scared. So if the media's job is to scare the bejesus out of us because they need to get eyeballs, where does it end? I mean, where does it end?
Well, right. I think that it's interesting because we think about like the perception. If you ask the average American, what's the average age of an American? They say 65. It's actually 39. Globally, you ask people, what's the average age? They say the 60s. But you look at India, it's 37. Saudi Arabia, it's 37. South Africa, it's 33. People are just confused about what's in the real world, what's really happening versus what they have in their mind. Because they keep hearing about these systems are going to collapse. Here's why they're going to collapse. You hear, for example, we're running out of land, right? But everybody in the world could fit in Texas. Now, Texas would have to have the density of Manhattan. I don't think anyone would want to live in a state that was that dense all the way across the street. But the point is, we're not running out of land, and we're not running out of the production from land. We're producing, for example, more grain today per person than we were doing 50 years ago with less land because of innovation and technology. So I think we have this, our minds want to believe in scarcity, and we're living in a world that's quite the opposite. We don't want to always count on innovation and technology to bail us out, but let's just face it, that's what's happening. Whether you look at energy or food production or literacy around the world, technology is driving this. We want to say it's politics and everything else, but what's bringing people out of poverty is it's technology, it's innovation.
What's the opposing force? What's on this side of facts and understanding? Because we all know the media is not going to do it. And unfortunately, your voice isn't large enough to do it. We don't have leaders that are doing it. So where does the opposing force come from?
So I'll tell you what my thought is, and I'm going to use, I think, something everyone can relate to. So if you think about living in the United States and you can get caught up on social media channels or on TV where they'll talk to you about how horrible it is for the middle class of the United States. Let me just give you a snapshot of the 50s to today. In the 50s, the average American lived in a 980 square foot home. Today, it's 2,400 square feet. 1 in 2 owned a home back then, just 55%. Today, it's 80%.
Wow.
Back then, 10% owned a TV. It cost $2,100 adjusted for inflation. Today, 95% do. $500 average cost. Only 41% graduated from high school. Today, 88%. Back then, average life expectancy 68 years. Today, 78 years. 50% of senior citizens were living in poverty. Today, 9%. 75% of African Americans living in poverty. Today, 27%. This is unbelievable to me.
Wow.
Average years in retirement back then, 0. Okay, because people lived less and worked longer. Today, average years in retirement is 12 years. It's night and day. What I think is causing it is we do have more disparity than we've ever had before, right? The gap between Jeff Bezos and his employees working in the factory is very, very significant. Yes, we had the Carnegies and the Rockefellers, but there were a few of them.
Today, and the Carnegies and the Rockefellers, by the way, Peter, the Carnegies and the Rockefellers didn't have Instagram to show you how much your life sucks.
Yeah, they weren't like the Rockefellers were you heard about them, right? Yeah, but there were only a few of them. Today there's 1,000, right, of these people, and certainly a few hundred. Where you can say if you take this top 1,000%, it's more than the bottom 50%, and that's true. And boy, disparity really plays to human emotions. I mean, you could look at Jeff Bezos and you could say, well, wait a second, because of him, poor people now have stuff delivered to their door for less cost than they used to have to go to their local stores.
Yeah.
Right. I mean, it's a tax break for the middle and lower class. Walmart was a tax break for the middle and lower class, right? You got stuff, it cost you less. You paid less for toilet paper, you paid less for toys if you went to Walmart than if you did at the stores before Walmart. So it made Sam Walton very rich, but it improved the quality of life of a lot of people. Amazon improves the quality of life of a lot of people. Steve Jobs improved the quality of life of a lot of people, right? You can do this with almost all of these billionaires, not all of them, almost all of them did something that's improved our quality of life. That's why we all move towards it. Like Elon Musk, everyone wants to hate him for a lot of reasons, but let's face it, the world is better. He might be a little off, he might be a little bit crazy, but the world is cleaner and it's going to be safer, and it's driving, and this innovation and technology is going to be rewarded. He's going to be a multi-billionaire. And does he make more than the bottom 10,000 people his company put together? Yes, he does. He does. And people hate that, right? Because we live in a world of comparison. And to your point, Craig, it's so easy to compare now, right? We just click a few buttons and it's in our face. And so we mistake that disparity for quality of life. And your quality of life is not dependent on somebody else's, right? If I can make your quality of life twice as good 5 years from now, you should be happy. But if mine becomes 10 times better, you're not going to be happy. And so I think that's the problem. And we're demonizing that group of people. At the end of the day, the estate tax captures those people, right? Bill Gates and Warren Buffett don't get to take that money to heaven or hell with them, right? It's going to stay here, and it's going to either go to the United States government or it's going to go to charity. That's how it works. A lot of people think there's a million different ways to get out of that tax. There's not, right? So what is Gates and Buffett doing? They're leaving almost all of it to charities. So, to me, I look at the quality of life of the average person. You want to see that get better. And if there's some outliers like Elon Musk and Jeff Bezos that have this tremendous reward because of it for their life, and that's it, I'm okay with that. But that's what I think creates this tension where we feel like we're not living a better life because, it's not as good as Jeff Bezos on his yacht in the Mediterranean when we're all, home quarantining.
Yeah, and there's those micro. I mean, obviously, you pulled out the Jeff Bezos and the Elon Musks of the world, but social media shows your inner circle, and the guy that you're making 50 grand, the other guy's making 300, and he gets to see the spoils of his life. And the $300,000 guy has a friend that's making 6, and the 6 1.2, and it's the disease of more, and it's actually a really scary place. And we deal with a lot of, Peter and I get the chance to meet a lot of successful people that are really, really unhappy and or want something that we have. And Peter and I have a great relationship in the fact that we can bounce stuff off of each other. Like, hey, let's be grateful here. Let's focus on what's really important, because it's not, you're never going to get happy by achieving something else. If you're not happy now, the journey is not going to make you happy.
Yeah, comparison's the death of happiness. I think that's a human condition. And if you look at the happiness studies around the world, the happiest people seem to be in some of the European countries and in some places in Africa and India that are the poorest, the very poorest without plumbing. But the reasoning that the researchers have that they interpret is that everyone's in it together. You're all in the same thing. If you're in that European country where everyone has healthcare, everyone has 8 weeks off, there's a lot of regulations, so there might not be that many people that can do much better than you because taxes bring it back down, seem to be happier. Trudging to a river to get dirty water, no health care, but everybody's in it with you, seem to be happier. And Craig, you start to talk about some people, they're not happy. The big difference tends to be they're looking at somebody else that's successfully running 5 different locations or has sold to a PE firm or whatever break they got. And that's an American phenomenon because capitalism creates that. Capitalism's more likely to create Jeff Bezos and Elon Musk because you will get rewarded in a big way if you are able to do something that is valued, that people are willing to pay for.
100%.
And that creates disparity. And so this innovation and technology that improves everyone's quality of life is the same thing that plays to this thief of happiness, comparison. And so it's an interesting tension we have. I don't think it's a coincidence that we have more Nobel Prize winners than anybody else on Earth. Right? We have more Nobel Prize winners than anyone else on Earth, not because we're smarter, right? That would be a pretty racist thing to say. I mean, the Americans aren't smarter. We're just people from all over the world. It's the system. It's disproportionate reward. If you're really good, my parents were from Egypt. They came here because they wanted to be disproportionately rewarded for their hard work, right? They wanted to, or proportionately, depending on how you look at it, right?
Exactly.
They wanted to come here and go, hey, if I'm going to work 5 times harder, I want to do 5 times as well. And so, if they're in Egypt, they were not going to get 5 times rewarded at all for working 5 times harder or studying 5 times harder. And so it's interesting that what's improving the quality of life of the whole world is this innovation in the United States, but that same thing creates this disparity here. That's the thief of joy, as you were bringing up earlier, Craig.
It's wild. So just on a personal note, what drove you to do what you've done? Like what was the driving factors that drove you to do
There were a couple different events, but the big one was my dad. He frankly got screwed, by people. He wound up with insurance policies that didn't make sense for him, an annuity that didn't make sense for him, a will when he should have had a trust, didn't know he was going from advisor to advisor, didn't know what was going on. The first person I hired in our firm, Molly, she got into the profession. She was in college. Her advisor at a brokerage house had put them in some proprietary products and went to cash after the tech bubble. Her dad wound up having to work 10 years longer than he would have normally had to. I mean, there's a lot of us that have that kind of story that got us into this independent wealth management side where you're doing investments without commissions and you don't have products to sell. You don't have investment products to sell, right? You're just trying to come up with whatever is best for the client, try to do it in plain English, try to do everything in one place. And be goal-oriented, not product-oriented. What are you trying to do, and how do I increase the odds of you being able to do it? I get a lot that by far my favorite thing to do is to sit with somebody and help them do that, create that clear path to where they want to go. And I think of my parents and what it would be like for them, and they're clients, thankfully, but what it would be like for them to, if there was no creative planning. And I want creative planning to fill that void. I want it to fill that void of, how do I help you get from here to there? How do I take you as you are with all the facts and circumstances that you've got and get you where you want to go?
Yeah. And, and it's beautiful thing is that's pretty pervasive. I love that you had a personal story that made you create something and make it easy for everyone so they didn't get screwed over. And like Craig was alluding to, it seems to happen in dentistry a lot. And so I love that creative planning now has an offshoot, with dental financial freedom, because it's so, you guys have an offshoot for that just for dentists because it's such a pervasive problem. And like Craig alluded to, a lot of our colleagues can't retire when they want to, right? Because of poor choices that have been made or what am I trying to say, Craig? Like a parasitic, not attack, but predatory kind of practices.
Listen, dentists were relationship people. We don't bargain. We don't ask hard questions because we don't frankly like when patients ask that of us. If you come in, you broke a tooth and you told your dentist, hey, instead of it being $550, can you do it for $250? we don't like that. We don't like to ask those hard questions. We value relationships. We go and fortunately, a lot of these people buy us donuts and we go golfing with them and they've been in our lives for 20 years. And we're not confrontational type or business type people where we're constantly reevaluating relationships where we should be.
Yeah, I agree. And my dad's a physician and it's the same exact thing. You also operate in a world that's healing and nurturing, right? Yeah. So it attracts a certain type of person to it. And financial advice is not a world of finance, it's a world of sales. And most people in finance did not go get a finance degree or a financial planning degree or an investment degree. They defaulted into sales. And they're selling a financial product and calling themselves a financial advisor. And, that's why we set up a specialty practice for dentists. I think they've got all the tools in place to accomplish whatever they want to accomplish. They've got a good education. They've got a great career path. They've got a good income. And it's really one of those, it's like tennis. There's some games you play to win. In some games, you play to not lose. The person that wins in tennis is the person that makes the least mistakes. Mm-hmm. You don't necessarily need to go out there and crush it. You just need to not make the mistakes. A dentist is starting there. That's a much better position than most Americans are starting at. There are certain things that dentists can do that if they just do them with discipline, they're going to get where they want to go. But you can get derailed very easily. You divert 10 years of savings into the wrong product and that's it. You know what I mean? Like that 1 hour decision can derail the whole thing. And so I think really knowing the basics and getting the basics done month in and month out, you will be on a path to success. Then if you want to do something a little different, figure out what you have that's in excess of what you need to hit your goals. And by all means, go swing for the fences with something, but just have a plan to get where you need to go. Cause you've already done the hard part. You've got the education, you've got the career, you've got the income to make things happen. and just focus on making them happen, and then take the risks with anything above that you want.
All right. So talking about risk, Peter, as we end this podcast, I know you're short on time. Since we spoke last, it was November 2019. And I've taken a lot of criticism for being a fan of Bitcoin and having an asymmetric risk.
Why do you have to do this to me?
Hold on. But
Peter,
since then,
it.
we've
You
had
knew
some people that are, in your space that have come out. You've got the Paul Tudor Jones and the Stanley Druckenmiller. A lot of people that have been Raoul Paul, Jack Dorsey. PayPal just had 300 released it to all of their users. So are you still users. Are you so that was November 2019. Has your stance changed at all? Do you think it's possibly going to be a store of value, or is it still just this crazy magic internet money to you?
So obviously Bitcoin's been crushing it. So congratulations, Peter. So here's been my thing from the beginning. So I wrote a letter on this maybe 4 years ago. My position's unchanged. 3,000 cryptocurrencies. At the time, a lot of them were really big, not just Bitcoin, Ripple, and everything else. I said 99.9% of these are going to zero.
Exactly.
I stand by that. 99.9 are going to zero. Maybe a few of them will prevail. It probably won't be Bitcoin, but maybe one of them will work out. To me, it's a bet. It's speculative. It's not producing income. And maybe one of them will work out, and maybe one of them will be Bitcoin. But sometimes that leader that looks so formidable, it's really AOL or Lycos or Excite. It's not Google. And so we'll see, we will see. But I'm not putting my money in it. I don't advise people to buy it.
I couldn't let this podcast go without, because it was such a funny point last time. And I was like, I'm going to ask him again, just for the repeat listeners there. I have to ask him again.
Well, he's teased me so much, by the way. We went on stage in LA with a bunch of dentists. He had this big old Bitcoin shirt, and I was ragging on him on stage. The whole thing's videoed.
It was $3,000 at that point, so it was really easy to kick me.
Oh yeah,
I took every shot I could on him, and he taunts me periodically with that. So
I told him, I said, Craig, get on stage with him now because of the pandemic. So you've got a little reprieve.
Exactly.
We'll see what happens.
Well, Peter, I taunted him with this one line. I said, look, and he kept going at me, and I said, look, history is going to prove one of us correct. It might be you, it might be me. So
that's right.
Who knows?
It's going to unfold. We'll see what happens.
That's right.
Yeah.
Well, Peter, thank you so much for your time. I know you've got lots of stuff on your agenda today, and I thank you for taking the time to speak with us and helping out dentists like you do. And everyone, I encourage you all to check out dentalfinancialfreedom.com and just schedule a call if it's something that you feel like, if you want a lot of your needs handled in one comprehensive place. I encourage everyone to check it out.
Thank you, Peter. Thank you, Craig.
And thank you so much for the, I know this was meant to be financial, but just the psychology of accepting reality, that Peter and I were both just blown away with that. So thank you for that.
Great.
This is definitely one that I'm going to want to go back and re-listen to periodically, just to get a true baseline on what's really happening in the world. It's a much more gratitude-filled
Future
reality.
is bright, right?
The future is bright. As bright as your teeth.
Oh, that's perfect.
Good to see you guys.
Have a good one, man. Thanks, Peter. Take care.
Bye.